Hey there! For many people, becoming an authorized user on another person's credit card is an amazing way to build credit history. Particularly for people who are young or new to credit, being an authorized user can give a large boost to credit scores. This will help those people get approved for better cards and get approved for high-quality auto and personal loans. Unfortunately, being an authorized user doesn't mean as much for people who are looking to get a mortgage. So, to understand how being an authorized user affects a mortgage application, you need to understand how the mortgage underwriting process works. The process is used by lenders to analyze and verify a consumer's financial information. It helps the lenders determine the risk level associated with lending to the applicant. Due to the sheer size and commitment of a mortgage, the underwriting process is extremely in-depth. The lenders check everything, including identification, credit scores, credit history, income, assets, debts, cash reserves, and more. In this process, the underwriter is almost guaranteed to notice an authorized user status. While being an authorized user will improve your credit scores, high credit scores are not always enough to qualify for a mortgage. If you have little or no credit history under your own name, lenders will be hesitant to approve your mortgage. In the case that you do get approved, your interest rates will likely see an increase. When it comes to long-term credit like a mortgage, you want to have the best rates possible. Becoming an authorized user affects your credit in different ways. For starters, the length of your overall credit history is going to be skewed. If the age of the account is older than when you started using credit, it makes your average account age artificially high. This is an obvious marker for lenders. Being an authorized user can also affect your debt-to-income ratio, which is an extremely important factor to the terms of your loan. If the minimum payment for the authorized card is included in the ratio, there's always the chance it could be far too high to be approved for a mortgage. While it can sometimes cause issues, being an authorized user isn't a complete roadblock in every scenario. In some situations, you can still get approved for a mortgage while being an authorized user. If you are approved, however, you're likely going to be paying higher interest. Unless you really like overpaying for things, you obviously would want the best mortgage you can get. And that is a bit less straightforward as an authorized user. This may leave you wondering, how do I get approved for a good mortgage? Well, before you apply for a mortgage, you should build your credit under your own name. For something as big as a mortgage, there are no real shortcuts. Your income, your credit scores, your length of employment, and your assets are all going to be looked at. If you want to get a high-quality mortgage, the simplest and most direct way to improve your credit file is to build it yourself. By establishing a solid credit mix, growing credit history length over time, always making on-time payments, and maintaining a healthy credit utilization ratio, you'll be mortgage ready sooner than you may think. Not sure if you're on the right track? Leave a comment down below. We'll get back to you. As always, thank you so much for watching, and good luck.